And the law was to stimulate real estate. Now, I'm going to teach you this law in just a second, but before I do, I want to make one strong comment. I'm not changing that law. That's still current. You got to walk out of here knowing that anybody who invests in real estate that is going to manage their rental property can bring how much loss through the wall? $25,000 as long as they make $100,000 or less. That's current. Oh, and by the way, they can't go back 3 years. They can't go forward 3 years anymore either. That's all gone. It's a year-to-year snapshot. Okay, so what did they do in 1994 to stimulate the real estate economy? They passed a law for one sector of the population only. That sector is anybody who's a real estate professional. Gang, I'm about to teach you a law that if you're in real estate, this law applies to you. But you know what amazes me? Most real estate professionals don't even know this law passed. It passed in 1994 on January 1st. Why is it that people do not know about a law that's been around for over now 13 years? Yeah, they were told. Because a lot of them sat in these classes and they listened to a guy like me tell them. So why is it that people don't know? Because here's the reality. Did you know that almost everything that I taught you this morning, by tomorrow at this time, you people will forget? And I'm setting this up because this next part I'm going to teach you, if you want to invest in real estate, I do not want you to forget. So now I'm going to give it to you. Don't write anything down. Here's what they did. They said January 1st, 1994, if you are a real estate professional, which I'll define in a minute, you, and only you, get to go back to the old days. It means you can go out and invest in as much real estate as you want. And when you are a real estate investor, we are going to allow you to bring all of your losses through the wall to offset all income from all sources. You will not be limited to the $25,000 hole. You can bring all paper losses with no limitation through the wall and offset all income from all sources with no limitation at all as long as you're a real estate professional. The only thing that's still the same with you compared to everybody else is you have to use 27.5 years, 39 years, and 5 years. Your depreciation table is identical. Other than that, your benefit is you invest in real estate, forget the wall. Doesn't exist for you because all losses come through the wall. And by the way, just so you get this, just so you understand how powerful this is, what happens if I'm a real estate person and I'm married to a doctor? My spouse's income, let's say she makes $500,000 a year. Is her income part of my income on my tax return? And didn't I say that if I'm a real estate professional, I can bring all paper losses through the wall and offset all income from all sources? So watch what I'm going to do now. I and my spouse, because I'm a professional, are going to go out and become a maniac and invest in all this real estate. So much so that we have over $500,000 worth of paper losses. Keep in mind, does that mean I lost $500,000? No. I'm going to smash that through the wall because I'm a real estate pro and I can, and I'm going to offset my spouse's income and wipe out all the tax so we now can make all that money and pay no tax at all. And by the way, if you clearly understood what I just said, here's what it really means to some of you in this room. Those of you in this room that are single, there's a bunch of doctors who will be looking for you. Run an ad. This is called the real estate professional rule. I'm going to have you jot it down and then I'm going to open it up for questions.
Love it.
Okay. I'm going to open up for questions in just a second, but I want to make a comment. You remember earlier this morning that I told you that I was a liar and that you should not believe a word that I tell you? Remember I said that? All right, so now I'm going to give you an alternative of how you can check out all this stuff. Because what I'm doing in this short 3 hours is I'm kind of giving you the short version. In other words, there's lots of details to all this stuff. I'm giving you the short version, enough to get you maybe interested. But I do want to tell you how you can verify some of this information. A lot of the stuff that I taught you is IRS rules. So where could you get this information to verify it? Yeah, one way you can go to the IRS website. Use the internet, you go to irs.gov. Now, has anybody ever been to a government website? Yeah, isn't it fun? I mean, it's really tough to kind of navigate that. So let me tell you what I've done. You'll notice under my name up there that I have a website. Based on the name, which is called Landlord Tools, you can see it's obviously geared towards who? Landlords. Okay, but what it is, too, is because I know I teach these classes, is I provide a bunch of free information there. And one of the things I've done is if you went to that page and you decided to become a member, which is no cost at all, you can have access to me doing all the research for you. In other words, I have a little link there that says IRS and landlords. If you click on that, and then a page comes up that says Real Estate Professional Rule. Click on that, and I take you right into the IRS website and their page that actually spells out all the details. See, what I've done with all the stuff I've taught you is I've done the research, I found out what page it's on in their website, and actually found it and then linked it. So you can go right there and save some time. Okay? That is also a way, when you leave this class, if you have a question for me, you can get a hold of me at landlordtools.com. I mean, you just click the contact button, it goes to my email. The only thing I'll tell you is that I don't get back to people right away all the time, because I get a lot of emails, but I try to get back to everybody eventually. So if you have a question, that is a way to get a hold of me. And it's also, I give you sources to verify a lot of the stuff that I taught you. Okay? Now, you might be wondering, why do I do this? It's because I'm such a great guy, right? No, do I have a mission? Any idea what it is? Yeah, and one of the things I'll tell you is I also provide this as a service to landlords. I have things on that website that I sell landlords to help them become better property managers. I have all the forms that I use if they want to, they can get forms in the places, but I have my system, how I manage. I also have something called an Excel real estate analyzer. You're going to learn after lunch how to analyze real estate using a pencil and paper. I've taken that pencil and paper you learn after lunch and I put it in an Excel spreadsheet that I actually show people how to do it in about 5 minutes, analyze any property. And I have them for sale there. They're not expensive, like $27 for a little analyzer, okay? But I do that to create another source of income. See what I'm doing here? And by the way, I don't make a killing on this. I kind of do it as a service, but it is something that I learned that's another source of little income. It's like a little rental property to me. Okay? All right, so now I want to open it up about the Reynolds Real Estate Pros. Or any questions? Go ahead.
What exactly do you, is the real estate pro defined in?
Okay, let me come back to that because I'm going to give you that, okay? Other than what's a real estate pro, any other questions on this? If that's the only question you have, is what's, go ahead.
When you're buying multiple properties, then the threshold, I mean, how many you buy, because the human debt ratio has
Okay, we're going to, let me come to that financing you're talking about. Now forget that. Forget what you just you asked me because I'm going to address it. Okay, go ahead.
And, I'm sorry, this is elementary, but vacancies, that lost rent goes straight over as a loss.
Yes. Anything you lose money on that rental property is a deduction against your income, period.